plummet, they sink this morning as concerns over a new coronavirus strand coming from Europe shuts down borders. Let's see how bad it looks. It's not looking good today. Let's check it out. Ooh. S&P 500 is at 3664. It's in the red. Let's see if gold is going towards 2000. Looks like gold hasn't nudged a lot. Nasdaq right now is still over 12,000, which is pretty good. But the Dow was under 30,000. I don't think it's a plummet yet, but they keep going down. Let's check out the Robinhood portfolio. Robinhood portfolio, just off of doing nothing, it loses $25 today, just off doing nothing. And this is what I look at right here. This ETF that mimics the opposite of the SPY. Right now the SPY is at 36 or 365, and it looks like it keeps going lower. Yep. It might hit 364 or 363 today. But the other ETF that I look at is this right here. It's UVXY. And if it's in the positive, S&P 500 is always going to be in the negative. If this is in the negative, S&P 500 is going to be in the positive. So, yeah. So, yeah. It's going to be a watch day today. Got $10 in gains back so far. See, it's not when things sell off, it's just not a sell off. Money has to go somewhere. It really does. Money has to go somewhere. And if the funds go nowhere, that means it's a hold, not a sell off and not a buy in. I got an alert this morning at 4:45, and it says UK stock and the pound tumble as Europe shuts borders. They're starting to shut down borders. See if we can get some more information.
Roses. And just like many of us shopping for flowers lack the flexibility to replace it with something else. Index fund managers have to buy that particular security, that particular amount. So that's a hidden cost potentially for investors if the index fund managers are buying at a higher price. And in many ways, it's arbitrary because they're buying that security based on what the index is telling them to do and not so much their own assessment of those security characteristics.
Wes, is part of your thesis on Tesla that they will in fact change the world?
Well, I think that with any individual stock, the expectations for what that company is going to do in the future are very well baked into market prices. And if the expectation for the market is that this company is going to continue to do well, then certainly you expect that company would have a high price. But we always like to say there's a difference between a great company and a great investment. When we look back historically at the performance of the largest stocks within the market, they typically had a meteoric rise in terms of their share prices as they went from smaller companies to very large companies. The real question for investors is, what do I expect going forward for investment performance? The largest stocks in the stock market have not tended to have the highest rates of return once they became very large. And that's why we believe it's so important for investors to have broadly diversified portfolios that use market prices and emphasize securities with higher expected returns to the extent that that's consistent with their goal, rather than trying to project what an individual company or sector or country is going to do going forward.
Well, so Wes, I'm curious if Tesla's kind of the action we're seeing around its inclusion in the S&P, are you kind of seeing this as a reason to not index to the S&P as closely because the index itself isn't exactly passive, or is that not exactly the way that investors should think about this?
I think it's a really good indication that it's important to have flexibility when you're designing and managing portfolios. If you think about the amount of trade volume that is getting soaked up within a security that's being added to the S&P 500, clearly that might have implications for the price of that security. Historically, on average, when a security is added or deleted from the S&P 500, the trade volume it experiences upon the effective date of that addition or deletion is about 25 times its normal trade volume. And so clearly it's important to have flexibility so that if you can buy that security maybe before or after and not on the day that the index is telling you to do, you can potentially get better price execution. And so I think that flexibility really lends itself to having a daily process to investing, where we believe that being able to decide every single day what you want to hold and when you want to hold it can result in more reliable outcomes. And that's clearly an area of improvement above and beyond what an index fund can potentially do.
We are not messing with the indexes today. Volatility index is at 28.27. It is past 24. The higher this number is, the higher contracts are going to be right now. Contracts that are normally low, we're talking between $30 and $80, are really high. Because normally I would pay like a contract for Square around $90, and they just hit their all-time high for 52 weeks. And when I go and hit trade, the least amount that I could pay just to get in to this play is $535. $535, and it's not a great return based off the high that they hit today. So if I was to pay $510 to get into this position, based off of the amount that I'm risking, it's not enough return just to jump in. Not for the percentage that I'm looking for. I've been highlighting SMH because SMH was really affordable. So to get into this game, it would be $155 just for it to go up to the next. So volatility is so high right now that it is throwing off the numbers, the amount that you would normally risk on a day-to-day average when it's below 24. So another affordable contract cost would be MU. Contracts with MU normally cost between $25 and $55, and they're at 90 right now. With the difference of $18. Yep, with the difference of $18 and $16. So that's even pretty high right now. Good old volatility. So this is going to be a watch day today for me. I'm going to continue to watch, see if this volatility changed. Nope, it has not changed. But as far as buying in and holding stock right now, I'll tell you something that was going down low, that is down $6.40 right now. That's Airbnb. Got that on my watch list, but it's not at a target price for me for it to be at my purchase rate. My purchase rate right now would be about 125. It gets down to 125, that's going to be at the correct purchase rate. But since this particular stock has not even been in the game for a year, it is very new. It's a newborn right now. We don't know the type of growth that it's going to have, but we do know the history of the company, the views of the managers and CEOs of this company, and the problems that they are fixing as a company when it comes to the market that they are in. So it is a good company to invest in. So yeah, waiting for Airbnb. If it comes down to 125 this year, that's gonna be my target price to jump in and buy. My target price to I don't think they're so new they don't have any contracts out on them right now. If I was to go to Airbnb, yeah, they don't. It says they have trades. They shouldn't be selling contracts because they're not old enough yet. Yeah, they shouldn't be selling any contracts. Just in my opinion, but hey, SEC is allowing them to do it, so I guess they're allowed to do it. Let's see, ARC. The ARCs are up today. Let's see what the ARCs are doing. ARKK. We know that ARKK and ARKW has Tesla in there. As a holding in this ETF, and they also hit a 52-week high today. ARKK. Yeah, there we go. Yeah, they hit a 52-week high today. They opened up at 127, and they hit 128.35 for today. And we look at the holdings. At the top of the holdings, you got Tesla right there, right at the top. You got Tesla, Invite, Square. Ooh, that's why they're going up. Tesla and Square went up today. Let's check out Tesla, see how Tesla's doing since it's in the S&P 500 today. Right now, they're down $38. They're down almost $40 today. They opened up at $666.24, and they're down from the close on Friday. They closed at $695. So Tesla is still high. It looks like they're losing a lot of money. Even if you have contracts, if you have long-term contracts, still hold on to it. Don't sell it. Tesla is still up pretty high. But looking at ARKK, what has them up this morning is Square. Square has them up this morning. Let's look at another holding inside of ARKK, Invite. Invite is up this morning. Not up by much, but it's still up. They opened at 47.10 and they're up at 47.84. And they're staying pretty consistent. We already know Square's up 6%. It's up 3%, 3 point. Oh, it's up 1%, 1.5% right now. But it already hit its record high for the 52 weeks. Let's check out Roku. Roku is a sleeper. A lot of people be sleeping on Roku. But they're hovering around I always mess with tech, man. Tech is a banger. They're hovering around 346. So ARKK. Let's check our ARKW. ARKW. Boom. See how they doing. Says right here they opened up at 151.05, which is they're still around that area. Today's range, they already went up to 152. Yeah, ARKW is doing wonderful. And they have Tesla, Roku, and Square, and their holdings as well. So I think if Tesla was banging today, they would be surpassing their 52-week high rapidly. But that's the good thing about ETFs. Um, one good stock weighs out another good stock. So if one good stock is having a not so good day, normally another stock within that ETF kind of averages out or uplifts the the whole entire ETF to not being a negative. So this is a good banger. This is a good banger. So if you have not invested in ARK, any of the ARKs, ARKK or ARKW, just saying. Only thing I recommend is that just don't do it while it's at the record high. It has a little bit of dip down, 1, 2, 3, 5%. Be a good time to get into it. Yeah. Shout out to EYL. EYL got me hip to a ETF site that was not on my radar called ETFDB, which I assume that it means database. Yep, ETF database. And if we look at ARKK, boom, we look at the performance of ARKK. Over the 5 years, they have had 512% returns. Over a 3 year, they have had 234% return. Over this year, year to date, 154.35% return. We look at the week, 2.7% return. We look at the month, 21% return. I mean, this ETF is a banger. It is a banger. I ain't gonna say no more about it. Look like it's gonna surpass its high today. That means there must be some stoppage in Tesla. Let's check out Tesla. Yeah, Tesla's starting to go back up. So it's gonna be some stoppage. That's gonna make the ARKs go up and surpass their 52-week high again. So I'm not gonna watch it. Matter of fact, my 25 minutes is up. So what I'm gonna do is I'm gonna remind us that this is not a fast-paced game. This is a slow-paced game. Slow money is still money. We don't need a rush. We just don't need to do it. As long as we got slow money coming in consistently, we still got money coming in consistently. You know what I'm talking about? I want you guys to care for the ones that you love and love the ones that you care